Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking S&P futures with the last unofficial week of trading completed here at the CME Group. You look at the fifth week in a row that we've had up now in the S&P futures, and you compare futures versus cash, the futures uptrend has definitely been stronger. As I just mentioned, we're up 5 weeks in a row in the S&P futures, but the cash indices, the ETFs, actually are only up 3 of those 5 weeks, with really unchanged weeks in those two sort of oddball weeks that we saw there. The futures rally has been a little bit stronger. The futures trend has been a little bit stronger. In the cash, we've had 13 of 18 weeks higher. In the futures, we've had 15 of 18 weeks higher. That's neither here nor there. It just basically tells you that there's not a lot of hedging going on to the other side of this thing. Now, consumer spending came out stronger today in the U.S. That was good news. We saw 4.5 year-over-year growth in consumer spending. That's versus last year, which was a 4.2. Obviously, it's the last consumer spending number we're going to get for 2017. So it was good news for overall consumer spending. And with some companies announcing bonuses and minimum wage increases, you can bet that just because of the nature of the American consumer, that money is going to get spent as well. So the S&P uptrend should still be intact. Some interesting things, though, it kind of doesn't feel like it. We did have a report out of a research firm yesterday that showed that this was the largest week of equity outflows from equity long ETFs in the US since September of 2015. That was in the wake of the Chinese yuan devaluation debacle that hit US equity. 17.47 billion in equity outflows for ETFs. Now that's a big number again, and could the signal a top? Yeah, it possibly could, but we're going into a holiday shortened period now, 2 weeks of holiday trade, low liquidity. A lot of these moves will be discounted by professionals, even if they extend, simply because there won't be as many people involved. Happy holidays from the CME Group. This is Bob Iaccino coming to you from the CME Group, talking equity futures, specifically the S&P 500.